I'll use America since that's the largest stock market. The American stock market has been going up for the longest in American history. Never in American history has the economy and the stock market done so well for so long. Maybe it's going to go on forever. Washington says it will. Don't worry. But when Washington says don't worry, I worry. I'm delighted to be here. Yes, my name is Jim Rogers, but I don't have a job. So, maybe I shouldn't be here. I don't know. I know we cannot talk too much about that, but I will say to you, as far as investing is concerned, in other places, at the moment, I'll use America since that's the largest stock market. The American stock market has been going up for the longest in American history. Never in American history has the economy and the stock market done so well for so long. Maybe it's going to go on forever. Washington says it will. Don't worry. But when Washington says don't worry, I worry. I worry a lot. So as far as my investments are concerned, I have sold nearly all stocks all over the world. The only places I still have shares are China. The China stock market is depressed. It's one of the few stock markets in the world that's depressed. And Uzbekistan. Uzbekistan is an old Soviet, whatever they call them, Soviet economy, which was ruined by the Russians. Now it's changing. And so Uzbekistan may be an extremely exciting place to make money. China may be too. So other than that, I am worried about the world. I will repeat, the U.S. stock market has had no problems for the longest in American history. So I'm very, very worried about what to do with my money. I have a lot of cash, and I have the cash mainly in U.S. dollars. The reason I have it, the U.S. is a terrible place as far as the fundamentals. The U.S. is the largest debtor nation in the history of the world, and it's getting worse every day. So you should say, well, why do you own U.S. dollars? And the reason I own U.S. dollars is because when the turmoil comes, people will look for a safe haven, and many people think the U.S. is a safe haven. It's not. We're the largest debtor nation in history, but because people think it's a safe haven, the U.S. dollar will go up. If it happens that way, I hope I'm smart enough to sell. And now, one of these smart panelists is going to say, well, what are you going to do with the money then? And I don't have an answer. Maybe you have an answer. I don't know where to put my money when I sell my U.S. dollars. So we will listen to them to find out.
Jim Rickards brings up a crucial concern about the U.S. stock market, how it's been on the longest bull run in history. This isn't just a record, it's a red flag. Think about it. Nothing grows forever, and when it does, it's usually followed by a sharp correction. Let's not forget, we've seen this movie before. Remember 2000 and the dot-com bubble? Or the 2008 crash? Both times, markets hit record highs, just before everything came tumbling down. When the market seems too good to be true, that's exactly when we should worry. It's a real pleasure to share these videos with you all. If you enjoyed the content, it would mean the world to me if you could take a moment to like the video, subscribe, and share your thoughts in the comments. Your support truly motivates me to create more. Thank you so much for your time and kindness. Rickards also talks about holding U.S. dollars despite the U.S. being the largest debtor nation. This seems paradoxical, right? But it makes sense when you consider global investor psychology. In times of crisis, people flock to what they perceive as safe. And for many, that's still the U.S. dollar. Look at the 2008 financial crisis. The dollar surged despite the economic chaos. It's like seeking shelter in a house that's already on fire because it's the only shelter you know. But here's something we need to explore further. Diversification, especially in overlooked markets. Rickards mentions China and Uzbekistan. Now, these aren't places most investors rush to, but sometimes the best opportunities come from where others aren't looking. A chart showing stock market valuations of countries like China versus the US would be eye-opening. China's stock market, for instance, has been trading at a lower price-to-earnings ratio compared to the US for years, which might indicate a potential for growth. Compare that to the S&P 500, where valuations are historically high. It's a stark contrast. And finally, the most significant lesson here isn't just about where to put your money. It's about understanding that every market cycle has its end. Whether it's tomorrow or in a year, the key is to be ready. Having cash on hand isn't a bad thing. It's about patience and timing. But where do you move after that? That's the real question every investor should be asking right now, and the answer isn't as simple as it once was.
Jim, back to you. I'll ask you two questions, one about China, one about the US. And they're kind of obvious questions. The first one is about China, and I'm sure you get this question all the time. Don't you get tired of staying in China because the stock market has not been great in recent times? And people say Xi Jinping doesn't like business, and probably he has a say on what happens in China. So what drives your continued optimism about China?
Well, I will hasten to tell you again, I make many mistakes, and I have made many mistakes in my life. If you want me to, I will tell you about my first wife. Oh my God, what a mistake that was. So I have made many mistakes, but as I look around the world, China is one of the few countries, if not the only, which is rising. China has had, in its history, has been on top 3 or 4 times. It has collapsed 3 or 4 times in history. In my view, it is now rising again, and the Chinese market is depressed. Most stock markets around the world at the moment are at their all-time high or near their all-time high. China is depressed. That doesn't mean it's a place to buy, but as far as I can see, the Chinese government is trying to revive the economy and to revive the country. And I don't see any other markets that are depressed enough for me to buy. The United States is at an all-time high. The Japanese market was down for 35 years. That is not a typo, 35 years. Now it's gone up, it's making new highs again. I sold my Japanese shares. I sold them too soon. But I don't see many markets now that are depressed other than China. So I, for the most part, am not investing in shares in many places around the world, but China is depressed. Does that mean I'm right? Of course not. Of course not. But it is depressed, and maybe I have a little bit of protection because it is depressed.
So just spending one more minute about this, you said it's a depressed market. That assumes it's a market. When we look at the share of private sector companies in listed market caps in China, actually that goes down, not up. If you look at the last 3 years, the share of SOEs in the market cap, aggregate market cap of the top 100 listed Chinese companies has gone sharply up, not down. Are you confident it's a market?
I'm not confident of anything. I can't tell you. I'm always worried. I'm always afraid when I make an investment. Oh my gosh, am I going to make a mistake? No, I wish it were that easy. Wouldn't it be wonderful if I could just buy shares and know that I will make money? No, I'm always worried, and I am worried about my Chinese investments right now. But if I look at Japan, if I look at America, these are 2 major economies where the stock market's at an all-time high. China's not at an all-time high. Does that mean I'm going to make money? Of course not. But I don't see any other markets in the world right now that are somewhat down.
Jim brings up an interesting point about China. While most of the world's markets, including the US and Japan, are at or near all-time highs, China's market remains depressed. This contrast is striking. Historically, market lows often present buying opportunities, but China is a unique case due to the heavy influence of state-owned enterprises, SOEs, and the government's control over the economy. Jim's confidence isn't rooted in blind optimism, but in the potential upside of a market that's been systematically beaten down while the rest of the world continues to soar. However, there's a legitimate question here. Can we really trust China's stock market as a traditional market? With the increasing dominance of SOEs, private companies are losing ground. Just in the last 3 years, the share of SOEs in China's top 100 companies has surged, which means the government has a tighter grip on the economy. This isn't your typical free market system where businesses thrive based on innovation or consumer demand. It's a managed economy, and that makes predicting outcomes even trickier. But Jim's perspective reminds me of one thing all investors face: risk. No one invests with absolute certainty. Even the most well-researched decision comes with a degree of fear and uncertainty. We saw this with Japan's market, which stagnated for 35 years, and now it's surging again. So, if you're going to take a risk, why not do it in a market that hasn't already hit its peak? A graph showing the divergence between China's market and the S&P 500 or Japan's Nikkei index would highlight just how wide this gap is. The key takeaway is that sometimes the most undervalued or depressed markets can offer the greatest potential, but they also come with significant risk. That's the paradox of investing. High rewards often follow high uncertainty.
So my next question is not about Uzbekistan, it's about the US. And you alluded to the ability of the US to be the safe haven that people come to when there is a crisis. One aspect of that is what now late French minister called the exorbitant privilege, the fact that the US can borrow a lot and there's always a demand for its debt. Now, the US is making a lot of use of its exorbitant privilege these days. The deficits are out of control, the debt is out of control, the fiscal situation is unsustainable on basically any reasonable yardstick. If it's unsustainable, will it continue to be sustained?
Well, first of all, you use the word safe haven. I don't ever use the word safe when I'm talking about investments. I don't know anything that's safe. If you do, hooray, tell me. Write it down. Give me a note. No, there's no such thing as a safe haven, a safe investment when you're talking about money and investments. So my strong advice to all of you is only invest in what you yourself know a lot about. If I tell you to invest in Uzbekistan and you cannot find Uzbekistan on a map, do not invest in Uzbekistan. Stay with what you know. I am American. I know a little bit about America, but I know that the American stock market is at an all-time high. I don't like to invest in things that are at an all-time high. I know your parents taught you to buy low and sell high. There are many markets in the world. I mean, I invest in commodities at times, but even commodities. I mean, gold is at an all-time high. Gold has never been this high. If you want to invest in precious metals, I would suggest you invest in silver. I own silver. I would buy more silver today. See, I will show you.
He's taking notes.
Wow. Here you go. This is not a gift. This is just an example.
We're watching.
But silver is down 40% from its all-time high. Gold is at an all-time high. I own both, but I would buy silver today because if the world has a big problem again, many people will go to precious metals. I'm an old peasant, and all of us peasants know we need some silver in the closet. We need some gold under the bed. But there are other things: cotton, wheat, oil, many other kinds of commodities. And in the world in which we live today, I had rather own commodities than stocks in most countries in the world. But they're bonds, they're currencies. You can invest in US dollars if you want to invest in currencies. I hope all of you will learn about the other investments besides just stocks in Korea or stocks in America, because there are many ways to make money, and I would urge you to start thinking about maybe some other things.
I'd like each of you to give a very brief response to a very complex question. Where in the world at this point do you see financial stability risk?
Well, I will go back to the world right now. Most financial markets are booming. And in my experience, when everybody's happy, it's a time for me to worry. One of the few places that I know is Uzbekistan. Uzbekistan was a Soviet republic. It was ruined by the Russians. It was ruined by the communists. But now there's a new crowd of people in Uzbekistan who are running things the way that Emil would run things. Maybe that's right, maybe not. But if you cannot find Uzbekistan on a map, do not invest in Uzbekistan. You must invest in what you know if you're going to be successful.
Jim raises an intriguing point about the so-called exorbitant privilege of the US dollar, a term coined by the late French finance minister Valéry Giscard d'Estaing. The US can seemingly borrow indefinitely because the world trusts its currency. But here's the reality. Trust can be fragile. The US national debt is ballooning, the fiscal deficit keeps growing, and at some point, this imbalance becomes unsustainable. The question isn't whether the US can keep borrowing, but for how long? Let's zoom out for a second. We've seen this before. Historically, empires that relied too heavily on debt, such as Spain in the 16th century or Britain after World War II, eventually saw their economic influence decline. The US, despite its current dominance, isn't immune to the forces of economic gravity. Jim's cautious optimism about silver and commodities reflects this historical perspective. Precious metals, particularly silver, have long been considered a hedge against uncertainty. While gold is sitting at record highs, silver, as Jim points out, is still 40% below its peak, which suggests a potential buying opportunity. But here's something even more fascinating. Jim's call for diversification into commodities, like wheat, oil, and cotton, isn't just about dodging overvalued stocks. It's about grounding your investments in the tangible realities of global demand. Commodities aren't abstract financial instruments, they're foundational to economies. For example, oil isn't just a trade, it powers everything from factories to transport. Wheat isn't just a chart, it's food security. As global supply chains become more fragile and inflationary pressures rise, commodities could very well be the safest, most practical assets to hold. Jim's approach boils down to the simple, timeless truth: invest in what you know. If you can't find Uzbekistan on a map, don't invest there. It's not about chasing the hottest trends or jumping on the bandwagon. It's about understanding where you put your money. This resonates with the age-old wisdom of patience, diligence, and preparation, qualities that have defined successful investors across generations. So there you have it. Make sure to hit that subscribe button, because it is my goal to make you a better investor by studying the world's greatest investors. Talk to you again soon.